Everybody, this is John Seroka, and I just want to let you know we're going to be starting up in just a few minutes. We are still seeing people log in to this webinar like crazy, so just hang in there, and we'll be with you real soon. Let me mute this. All right, everybody, it is time to get started. I am John Seroka again with Seroka Brand Development and also the Mortgage Technology and Marketing Committee Chair. And welcome to our very special webinar today featuring some of the very best of the Mortgage Innovators Conference. But first, a message from our sponsor, Tavant. And you know what? Just to make sure that everybody can hear me, I'm going to ask, hey, Dustin, can you hear me okay?
Good question, John. Yes. Yep. You're all good.
Well, I don't want to screw up this part, right? Okay. So a message from our sponsor, Tavant. Tavant is a Silicon Valley-based technology company solving the most complex lender and borrower challenges with solutions, services, and Tavant Velox, an AI-powered digital lending suite of products. With Tavant Velox, lenders grow application and origination volumes, reduce costs, improve pull-through rates, and so much more. Email hello@tavant.com or visit TavantVelox, VELOX.com, and learn more. All right. You are all going to be so happy that you joined us today. We have some great speakers from some truly remarkable companies with us. I personally couldn't be more excited or more proud to have them here today. So be sure to write down all your questions as we move through this webinar, because we're going to have a Q&A session at the end. And before we go any further, I want to give a special shout out to my fellow committee members that worked so hard to put this together today. And they include Sanjay Kuttemperoor, founder and CEO of WikiRealty, Laura Martell, marketing manager at Mountain West Financial, and Dustin Hobbs, the communications director at the California MBA. You know, you just can't make these things happen without good people by your side, so thank you all very much. All right, so the innovation that has taken place in the industry over the last few years has been truly groundbreaking. It's been led by great thinkers and entrepreneurial minds, some of them who have risked everything to build the technology that is transforming our industry and how we do business. Very smart people. They've created great efficiencies in the mortgage manufacturing process that have resulted in a much better borrower experience and also great savings in loan production. So I would like to introduce you our panel of speakers today, each of whom will be interviewed by my co-hosts. They include Alex Kutsishin, the co-founder, CEO, and Chief ROI Booster at Sales Boomerang. Adam Chaudhary, President at FundingShield. Matthew Wood, Senior Director, Consumer Lending at Tavant. So we have some exciting people lined up today, so let's jump right into this. First, I'd like to pose some questions to each one of our panelists, and I will shoot this first question over to you, Matt, and any of you can jump in at any time, okay? So first question, what are the biggest challenges for lenders that want to adopt digital mortgage technology?
Can you hear me?
Yes.
Okay, good. So we're fighting a little bit with technology right now, so I'm glad that the audio is finally connected. So to just repeat the question, it's what are some of the challenges that folks have with mortgage technology?
Yeah, what are the biggest challenges for lenders that want to adopt digital mortgage technology? What do you see as some of the biggest challenges?
Yeah, so I see kind of a couple things. From the interactions at the conference itself, let's focus on that, and I'll kind of back up to my opinion. I see the key barriers to adopting kind of mortgage innovation technology is one, we'll always have the practical barrier of regulation. That's something we always have to deal with and kind of drive around or drive through. But yet, I do think one of the big barriers to adoption is just a willingness and openness to redefine how work gets done. With the majority of my clients that I work with on a consulting basis, we all kind of do what we do it how we know how to do it. And so it's very easy to try to carry forward the way we work rather than, approach it from the angle of, so let's say, how do we make it customer centric? How do we make it frictionless? Those are different organizing questions than how do we keep doing business the way we do today, but do it on a web page. So for me, the first and primary kind of barrier to mortgage innovation is being willing to sit down and kind of revisit and really, really look closely at our process and what makes our companies run. Thanks, John.
Sure. Alex or Matt, do you have any thoughts that you'd like to share on that?
I mean, can you hear me? This is Alex.
Yep.
Hi, Alex.
Hey, first of all, thanks for having us on. Awesome introduction. Pleasure to be here. You know what? I think when it comes to challenges, and not to answer this in such a vanilla way, because that's not my style, but I will answer it this way this time. It's the basic challenges that comes with anything new that you try to put together and test out, and especially when it's in its first, second, or third stages, you're going to have those organic challenges that come with anything new. So, not to bring up a silly concept or a silly business model like multi-level marketing for just the sake of this conversation, but that has gone through a variety of changes over time, and where the challenges were, 30 years ago, they're not there anymore. So this is the same thing here. When you're talking about challenges, they're just challenges of the time, and maybe not so much challenges of making it work, but it's just the basic understanding of something new like a digital mortgage process. So I think it's just a matter of the stage that we're in mortgage tech at the very moment, or digital mortgages at the moment. That would be my insight on that.
Yeah, I think this is Adam John from FundingShield. Nice to pleasure to be on this webinar. I think some of the biggest challenges that we see is explaining the rationale that drives the ROI in terms of how the individual lender, investor, servicer, who happens to also be an originator, i.e. this very highly varied nature of the type of parties that are probably on this call today, how they look at the overall value chain and how they define value creation and how technology can solve that. And I think the biggest challenge has been a couple of things. One, to kind of the points of the other panelists, it's common data definition. How do you kind of get to the same data, the same result? How do you take that data that you're ingesting into this process to kind of create new information that can help drive and improve processes? And then how does that value of that new information that's created result in a more impactful asset that has better attributes, better asset quality, better perception in the secondary market or from a servicing perspective? And those are pretty tough questions to answer. And all of us are trying to provide different services that provide aspects of those, from origination to closing to settlement to post-close, et cetera. And I think the stitching up of a lot of those services is kind of where folks like the CMBA have taken the, very, very challenging approach to kind of pull all those different kind of services together to allow some of the largest lenders in the country to see, hey, there is interesting technology out there, and the innovators are thinking about not just themselves, but one another and how we can work together to solve these problems.
Yeah, you know what, Adam, that's a really good key point that you brought up just now at the end. Good points, everybody. Another question I had for you is, what do you think the next big thing or breakthrough is going to be in mortgage technology? I mean, there's a lot of great things happening right now, so that could be somewhat of a challenging question, but what are your thoughts?
I think I'll take this one to start, and maybe Matt and Alex, I'll be real quick. I think it's pretty simple. There's been a ton of optimizations done on origination, and I think now the challenge there is to kind of help drive kind of lower costs, more efficient processes, better customer experience, which I think some of the folks in this line, I think Alex, you did a great job knocking it out of the park and explaining what the customer experience means today for a whole host of multi-generations that are part of this, target pool of clients. And I think the challenges, that were of yesteryear were more about how to find that client and how to position yourself in front of them. And I think now technologies like yourselves are really trying to optimize the relationship and kind of make sure that that spend that occurred to get that client results in a lifelong relationship. And then for folks like ourselves who are not in the origination space, there's this whole other realm of activity that's kind of part of the closing back office traditional procedures and processes where there's a ton of room for improvement. And a lot of that's through doing better validation and verification of data, so there doesn't have to be so many redundant or repeat processes, from settlement to title to appraisals to a whole host of other things that are required to kind of put together the loans. And the investors are looking at this stuff as well, and D1C has been a big driver of some of these initiatives, but now there's really room for operational improvements, cost reduction, and streamlining.
Mm-hmm.
Yeah. So Adam, first of all, thank you for that compliment, and that is definitely going to be what I would say is what's going to. And this is Alex from Sales Boomerang. I'd say definitely improving the experience for the borrowers, because especially the audience that's coming, and actually all of us. It's not about the audience that's coming. All of us now want an experience over, the end result, right? What is it going to feel like? How are we going to do this again? What does the future of this relationship look like? Did I enjoy myself? So I think what we're seeing now, all the digital mortgage and all the different platforms that automate the process for the borrower, things like what Sales Boomerang is doing with delivering borrower intelligence to make the experience better. The point of sale systems that make the process faster and more efficient. I think everything is moving more towards that. And of course, it's about how do you make the borrower understand that the company they're dealing with has their best interest in mind, and will have their best interest in mind, because they have information about the borrower that the borrower themselves don't know that they could take and use to help themselves. And so I think that's where more future tech is going, is letting consumers know that the people they're doing business with are actually looking out for them, and not just trying to sell them something, but are truly showing them the path of when they're going to be in touch with them again. When is that next touch point that is beneficial for the consumer and the borrower, and not particularly putting a borrower in a box that says, because this is who you are, we're going to market this to you, but rather this is where you are in your life right now, and this is how we as an organization are going to help you. And by the way, it's going to be super easy for you, because we already have your information. We already have everything we need for you. So I think it's just streamlining and improving that experience for the consumer.
Excellent. Thanks, Alex, for that. Matt, would you like to?
Sure. Just to tack on a couple of thoughts. I mean, my intuition is really strongly with both of your comments, Adam and Alex. It's data that is composed and kind of orchestrated into the information and the asset. It's easy to talk about data, but when you take a step back and say, hey, where is the real product innovation? Why hasn't it happened? When is it going to happen? When will kind of mortgage as both process and activity, but also as a business, begin to be recomposed? All of that is going to happen through the application and use of data, through being able to aggregate it, pool it, understand it, interrogate it in all the ways that we need to make a different business. So I think the next wave of innovation writ large will be driven on the backs of our understanding of information and data. But just like Alex said, from an experience point of view, for you, me, and everyone else buying homes, it's going to be around how our loan officers change the way they collaborate with realtors, the way the brokers take care of their brokers' borrowers. We're going to see kind of the improvements of the core experience that have become so intuitive right now, kind of spread out and become more pervasive. I also think that, just like Alex said, for you and me and everyone else, it's just going to be easier to be a customer, as the information flows.
That's an awesome statement, Matt. I think that's brilliant. We're very well put. And to add to that real quick, and this is not digital, this is not tech side, but one of the things we've been talking about here, as a company, we always believe that the borrower is why we all exist, right? We're here because the borrower has given us a chance to serve them, right? And so our mission statement of no borrower left behind has always been, let's prove to the borrower that we can be there for you in the future. However, I believe the future, and this is something that Matt, you had just kind of pointed to, is we also need a campaign to have the borrowers agree that they love their lenders, right? The way you make the experience better for yourself is to say, I enjoy working with you, right? Because if it's just one way, then you're still going to have a little bit of friction there. But if it's both ways of like, look, you promise to do good for me, I promise to be loyal to you, and together we're going to make an experience that works, that makes me be the best kind of customer I can be and have the best experience. So it's not technology based of having borrowers say, I really enjoy working with you, but it's more philosophically and how we as an industry, like you said, brokers and loan officers and realtors, and in my opinion, financial advisors and insurance people, I think all of them need to combine forces and make the experience for a borrower, three-dimensional, and not just this is what I'm here for. So it's not technology based, but I think it's philosophically in alignment with where the industry is going.
Well, thank you so much, Alex, for that, and Matt and Adam. My gosh, I couldn't have asked for a better panel. You guys are great. All right. Well, hey, look, in the interest of time, I had another question or two, but in the interest of time, I want to make sure that we get through this so that all of you in our audience have a chance to get your questions answered. So with that, I'm going to flip this over to you, Laura, next. And, there's, as you go through these questions, as we go through all these questions, you guys, if somebody has something to say with respect to any of them, we don't have to keep everything, separate. You can jump in and give everybody your 2 cents as well. So with that, over to you, Laura.
Thanks, John. Thanks so much for having me. And Adam, thanks for being here today. So to kick this off, will you tell us a little bit about FundingShield?
Absolutely. Thanks, Laura, for the opportunity to share a little bit about what we're up to. So FundingShield is deeply rooted in preventing wire fraud as well as managing settlement risk for lenders, investors, and or real estate participants. We focus on residential, commercial, hard money, fix and flip, warehouse, all sorts of retail to wholesale originators, and have started working with some of the correspondent market as well to provide both wire fraud prevention and asset quality services as it pertains to the closing and settlement of actual mortgages as well as real estate transactions.
Great, thank you. So how is wire fraud actually affecting the mortgage industry?
Well, it breaks down in a couple of different pieces, and I think what you're going to hear is there's a whole host of opinions as to kind of what's causing the wire fraud, but the kind of key fundamental aspect, if you take a step back from it, is the following. The mortgage market in the U.S. real estate market is the largest market in the world of its type, anywhere between $1.5 to $2 trillion a year when you factor resi, commercial, and other outright real estate purchases. It's the largest market in the world that does not have a settlement clearinghouse, exchange, etc. It also has one of the most disparate settlement kind of structures out there. About 60,000 individual parties can provide services, whether they're title agencies, direct operations, independent agents, escrows, attorneys, etc. So when you pick those two things, and you also add in the fact that the average residential mortgage transaction is anywhere between $230,000 per transaction, that amounts to about $8 million transactions a year. So from the perspective of bad actors out there looking to take advantage of a market, you've got the perfect storm. Couple in the fact that the actual settlement process, even in a residential mortgage origination process and workflow for the largest lenders out there, many of whom are our clients, they will tell you that it's the most difficult and stressful part of the actual journey of closing that loan for the consumer. And let's not forget, it's stressful for the consumers too. So to echo the points that my fellow panelists made, the consumer experience is being affected by wire fraud, as well as this kind of disparate, disorganized process that is closing that has to happen, right? Once the closing happens, then we actually have a mortgage. Up until then, we've got a bunch of paper, files, as well as underwriting work. So when you ask the question, how is wire fraud affecting the mortgage industry? It's really hitting at the underbelly. And the underbelly is the following. It's dealing with the fact that we have to trust third parties that are providing services to us and that we're working with as participants in this market, and that those parties have a couple different attributes to do with them. We used to be able to take what was called known and trusted vendors, and I've heard this term used time and time again. And the problem with that is known and trusted vendors are also susceptible to business email compromise attacks, intrusions, phishing, hacking. There's also another level above this, which is they're unknown parties who are purporting to be those parties we're looking to work with. So the ability to take advantage of a more digitized process, whether it be through electronic communication via email, or the fact that we're trying to speed up timelines to kind of close those mortgages quicker, faster, and with less red tape, has contributed to the fact that there are parties out there that are trying to do intentional acts of fraud, as well as parties who are purporting to commit fraud and purport to be intended parties and impersonate those parties. So it's a question of persona, taking advantage of leaked data, as well as trying to insert yourself into a transaction flow, workflow, and study and analyze the communication patterns of parties involved. This does not sound like, and it should not sound like, what you guys hear about when you hear a credit card fraud, where you can buy information on the dark web. You may have all experienced this, where you get $1 charge the first time, $2 the second time, then a $500 charge the third time. And the merchant payment systems have metrics in place to try to prevent some of those fraudulent charges. There really isn't a solution with intelligence and algorithms out there that helps protect parties that are transacting in the federal wire system. And that's really where FundingShield comes in to provide its services, and we're happy to talk a little bit more about it in this call.
Yeah, that's great. Thank you. I think sometimes we lose a little bit of perspective on some of that. So as we're all trying to tackle this issue, I know I've seen plenty of trainings and warnings. They're all being sent out by emails. But what innovative solutions and strategies are being deployed to protect against wire fraud over at FundingShield?
Well, yeah, thanks for the question. And to be honest, the question itself kind of highlights part of the problem, which is, I think this industry, the real estate industry, if you think about the number of times that consumer sees a warning in the footer of an email saying wire fraud is a problem and is not given a pragmatic tool and or solution to help solve that, it is almost laughable, and it's very dangerous. And it's something that we've taken very much to heart in providing tools not only for lenders as well as the investors, but also for consumers. And so when you think about kind of what are we doing here today to kind of help prevent wire fraud and impact to consumers and lenders, it's around building better data sets to kind of do the verification, the validation of parties to make sure they are who the intended recipients are in a transaction, to making sure that monies are going to parties that are licensed and meet requirements and they're acting in good faith, as well as making sure that lenders are protected. God forbid those parties have an internal fraud scheme or misapplication or a moment of negligence occurs where monies are misapplied or misused, to make sure they have all the rights available to them and afforded to them vis-a-vis the title insurance underwriters, who are also our partners. This isn't a problem for just title companies or just consumers or just lenders. This is a problem for all the parties that are part of this kind of settlement, collateral, title side of the business. And let's not forget, there's no mortgage if there's no collateral. If you don't have a good title commitment, a title policy, it's a big problem for lenders, and it's starting to be something people are seeing more and more of. We actually put some analytics out today that you can check out on LinkedIn that talk about the number of transactions that had non-compliance, whether it's from a licensing perspective to wires that don't match the intended recipient, to wire accounts for entities that are not licensed, or personal bank accounts of parties, to wire swapping attempts. It's a very, very large number. It was almost 30% of the transactions at the period ended at the end of June of this year. It was the highest number we've ever experienced. And that's across a multitude of transactions. So that's not on a couple hundred million. This is on billions and billions of transactions that have gone through the system. And so the reason we bring the tools that we have to the forefront for wire fraud and the ability that we have to solve these problems is based upon the ability for us to credential the individuals, validate their persona, whether it's a digital persona or the persona of an intended participant in this market, to make sure they are who they say they are, and they're acting in good faith, and there's substantial data that we can independently validate outside of the transaction workflow to make our clients comfortable and stand behind that work for up to $2 million or $5 million per transaction.
That's great, thank you. And that white paper sounds really interesting. So we as lenders, I think in a lot of cases we have the tools to adopt these tools, but really, how are our clients and our consumers, how are they being protected?
So I kind of hit upon this earlier. We're in talks with and have deployed solutions that can be embedded into the banking applications of the money center depository institutions. We have applications and deployments in place that can be embedded into the lender portals that are consumer facing for the consumers, where the consumer needs to provide a few basic details, such as the wire account party they're looking to wire. So let's say ABC Title of Ohio, LLC, the bank account number, and the ABA number. The only difference between our process and the process they go through now is they're going to get all those warnings, they're going to get all those confirmations to say, hey, double check the wire, confirm the wire, but they're also going to be given a portal where they can input that information and get a definitive response saying, pass, this bank account is definitively owned by ABC Title of Ohio, or non-pass, and do not proceed. And this is something that the lenders can deploy, or that we have worked with several partners, such as some of the members and attendees of the CMBA's Tech Innovators Conference, such as FormFree, where we've integrated solutions with them, as well as our friends at Tavant who are hosting this presentation. So we're not thinking just about how do we get in front of the consumer to provide the tool. We're also thinking about what's the best integration and route to do that with our fellow partners who are also innovators in technology and may have existing integrations that might make more sense or be better positioned to have the consumer get the best experience.
Well, thank you very much, Adam. That is some great information that you shared with us. With that, over to you, Sanjay.
Hey, thanks, John. Adam, it was great hearing from you again. You and I connected last week, and I'm very intrigued by your business, and certainly something that's needed. And excited to be talking with you, Matt, as well. We met at the conference, so hey, nice to talk to you again.
Glad to be here.
So once again, I know that John gave us a brief intro of Tavant before we got started, but I don't know if there's anything more you want to add, or I can just kind of dive into my questions.
Oh, I think the one thing I want to add, just kind of building on something Adam touched on, is, the way that wire fraud is impacting us is it's reinforcing the fragmented nature for portions of the way a mortgage is generated. And, the real solution is to connect the dots better. So, when you look at Tavant to understand who we are, one of the things that we do well, and we do it per force of technology and product, is connecting the dots together. Kind of at the core of who Tavant is in terms of identity is FinConnect, which is a product of ours. It's a hub for all the mortgage integration. And so the way that we relate to FundingShield is to connect FundingShield to us and to all of our customers, and make that available with very little friction and quite freely across the network of our customers to non-customers and forward onto there. Because the goal is simply to be able to plug that gap. And the only way we can close the gap of wire fraud or close the gap in the customer experience, the most powerful way, I should say, is to close it through the movement of information, to make that information transparent and quickly understood. So who is Tavant? Tavant are the people out there that are behind the scenes, bringing that kind of collaboration together to reorganize both the business of and the experience of mortgage. All right, so Sanjay, hit me with your first question.
Yeah, that's great. And I think you kind of answered my first question with what you just talked about, because my first question revolved around how you see digital innovators today, sort of addressing the need of creating operational efficiency. And I think what you just said kind of touched on that. Unless you want to add more.
I'll add a little bit more. So all of us that have kind of stakeholders that are on the mortgage origination side of the value chain, just cost is such a huge focus. I mean, I just saw, all of us just saw back in July, the cost survey come out from the MBA, and for direct retail channels, it peaked at $10,200. It didn't go down; it went up. It was 8,000 and change, and almost 9, and now it's even above 10. So the immediate need and kind of the immediate application of innovation in mortgage is streamlining and reducing just the amount of manual processes. So in here it's very typical. What you do with technology, you automate and streamline, and where you can, you simplify. So that's kind of, I think, the immediate contribution of the mortgage innovators. I would say, though, when you take a step back and look at kind of, innovation in the fullest sense of the word, creating something new that hasn't existed before, what I'm seeing there is I'm seeing the mortgage innovators, those that came to the conference just recently, those that you'll see in many other different conferences or contexts, both competitors and collaborators. What you are seeing, though, is you're seeing a coming together of being able to work across boundaries. And that's really fascinating to me, of how Tavant as a company will work across the boundary with another company in the interest of a given client. We'll solve a problem together. And we're seeing, I think, those boundaries break down as the information flow between the different providers in this space begins to be connected together.
Got it. Yeah, that's really interesting.
This is Alex. Sorry, may I jump in there just for a second? I love that statement. Matthew, man, that statement of competitors and complementary companies coming together to help a client, I think you couldn't have hit it better. Like, I'm seeing the same thing here. We're seeing it as a company as well. And we think that's such a refreshing thing to see in such a competitive environment, that the beneficiaries is everyone that's on this call, right? Like, when you're hearing companies that may compete with each other but will come together to help you, I mean, the lending industry wins, period.
Yeah,
absolutely. Yeah, and I think problems get solved in new ways. Go ahead, Sanjay. Sorry.
No, I think that's fantastic. Thanks for jumping in as well, Alex, on that. Just kind of taking it to a higher level, Matt, what do you think are some of the sort of the higher level emerging themes that you saw coming out of the conference, and how do you think that the digital innovators out there are kind of meeting these new opportunities and needs?
I think we've already kind of touched on 2 or 3 of them already. We touched on data, we touched on customer experience. I would say, to kind of amplify a little bit on the experience side, what I'm seeing is I'm seeing what used to be only contained to folks that designed user experience, and we're kind of on the creative design thinking end of the equation. I'm seeing, in a very positive way, user experience, and considering just all of those many interactions that we have one with another in this industry. I'm seeing companies begin to take them very seriously and to think through how they want to be in the world with their customers. So kind of user experience is being elevated to kind of the intuitive level, where it used to be in the hands only of creative designers that wore very cool sneakers it's kind of everyone's beginning to think in terms of how does our customer experience this. So that's becoming very pervasive and kind of reshaping the way we engage with our initial projects with our clients. And then I guess one last point, in addition to data and the composition of information and customer experience, of course it's going to be analytics in the long run, because the data and information is so available. Machine learning is real. It really can help us with practical problems. It can help us make better decisions more quickly, offer up a better array of options to our customers, options that matter versus just options that are different. So we're going to see the rise of machine learning. We're going to see it really come to play in how we operate our businesses.
Got it. So this isn't really isn't really a tech question, but what do you view are some of the outside forces that are sort of creating room for this innovation in our industry?
When I look outside, it's like, what are the big changes that are happening? Because we've been talking a lot about the internals of the mortgage industry. So you look at the demographics across America. You look at the millennials being the largest purchasers, but yet not yet the largest homeowners in the United States. That helps us understand the market a little bit differently in terms of how it should be addressed. You look at, say, even the economics of the time that we live in, where we have very, very low interest rates. That shapes the industry and gives a certain complexion to it. Though there could very well be a time where interest rates have a different profile, and that difference would give us the attention to, say, focus more on secondary market operation. We see this in small ways with kind of the growth of the non-QM space. That's also a large force. Is how do you address the underserved kind of left-hand, right-hand portions of the spectrum? The underserved portion that where debt is a real family problem is preventing them from entering mortgages, or the far right-hand where you have just very large loans that there's no place for them, and it's very difficult to underwrite them. Those are some of the kind of larger forces I see that create opportunity for all of us to kind of move ourselves into and begin to improve what's happening on the ground.
Okay, yeah, that sounds.
That was a long answer. I'm going to keep the next one to 20 words. Ready, set, go.
You're gonna write a Dr. Seuss book where you're gonna only say 20 words?
Yes, and they're gonna rhyme. All right, give me your next
challenge accepted.
Last question for me, and I think you touched on this before when you talked about the need to sort of improve consumer experiences. But what are some of the other values that are seeing in sort of the innovations that that are on the horizon? So what are these companies sort of valuing the most?
The companies that are innovators themselves. So when I look at Tavant, what do we as Tavant value the most as we with our deliberate investment into research and development into the market? Really what we are valuing is quality of experience of customers, meaning end customers, the consumer. We value attention and detail to the business of running the business. So how do the dollars actually happen for a given company, and why are they shaped the way they are? Why do they have the profile they do? Mortgages in a way you could think of it as a commodity. It's very, one mortgage is very like the other. But with that being the case, it also means that small changes in how you approach the market can create a niche for you as a company. That's all around innovating around the business of the business. And then, of course, I think in terms of core values, collaboration, like I touched on earlier, that Alex touches on it, whenever he gets a chance, is kind of that collaborative nature of being able to bring multiple solutions together, independent solutions together to really solve a larger problem, is something that is in our hands today. It really wasn't, 9 years ago. 9 years ago, it was one system to rule them all. Systems had to be big. A system had to do everything. Nowadays, we can bring together 3, 4, 5, 6 different solution providers and really compose really compose a business process that works, better than any of them could have worked independently.
Yeah, and in fact,
Thanks, Sanjay.
Yeah, that kind of touched on my last question too. So, that was great, Matt. Thank you very much. So at this point, Dustin, I'll turn it back over to you.
All right, thanks, Sanjay. So, Alex, I've got a couple of questions for you. So the first one, so historically, mortgage industry has been very transaction focused, transaction based. And I just think, with your mindset, it seems like you feel that there's a time for a shift, and that we're in that shift right now. So what are your thoughts on that?
Well, thanks. Great question. Love that question. And it's been a self-fulfilling prophecy in this industry. Nobody wants to be transactional, but they're not doing transactions. They're just, they're making, people are making promises, but they're not acting on those promises. As one of my favorite things that I hear in this industry is, we're a consultant, we're an advisor. Are you really that? Or when you have a chance to sell something, do you sell it? Right? A consultant and advisor advises and consults based on facts, based on things that are going on inside their customer's life, and they can say, hey, based on this, based on the market, based on where you are, based on what you make, based on I'm advising you to do blank. Okay? So you will continue to be transactional if you make promises to be something that you're not, and your customers recognize that, right? So the way you get out of being transactional, and look, the word data has come up a bunch. I'm sure everybody's read the articles that in 2019, the data is now worth more than oil. There's a reason for that, right? And the reason for that is data, good data, used properly by the right people for the right purpose, helps create a better, not just experience, overall, not just business experience, but overall life experience gets better, right? We can say thank you to the Ubers, the Amazons, the Nests, the Teslas of the world, who understand that if we start to deliver things to people the way they expect them to be delivered before they even have the thought of that expectation, then you have things like AirPods, right? That you take one out of your ear and it pauses the music you're listening to, you put it back in your ear and it starts to play. Did anyone ask for an instant pause when I take a headphone out of my ear? No. But Apple thought that through to the point of going, that's our best-selling product over the last 2 years. So the way you get from transactional and into a model which this industry has never dreamed of, which is repeat business, right? Reoccurring revenue. How do you do that? Well, the way you do that is you make someone love you, right? You make someone say, this is my company. They promised something, they delivered, they were there for me. They were there for me even when I was transitioning to another lender. They were still there for me. Or transitioning out of a state that they didn't even have a license in, they were still there for me, right? And so to go from transactional to having, actually flipping the model of, instead of 17% of people come back to the lender they did their last loan with, to 83% of people coming back, is you have to be able to deliver on your promise, right? And stand behind what you're there for, right? Which is to help the borrower. So I hope that was a clear answer.
No, that's great. I think there's some great insight in there, and it's definitely a different way of thinking than I think folks have thought about the mortgage business, not just people in the business, but consumers too. So I want to go back real quick, Alex. I apologize.
Sure.
Just for folks who don't know about Sales Boomerang, why don't you give us the quick pitch on what you guys are about?
So Sales Boomerang is the only automated borrower intelligence system in the mortgage lending industry here in the United States, or maybe even in the world. And the idea is, as you can see on the image on screen, if everyone that's watching and listening to this, no borrower left behind, right? So that's how do we accomplish that mission? That mission is accomplished by telling lenders when someone in their database is ready for another loan, right, or a loan conversation. And today, right, it's not about when you're going to be ready for it, but having a conversation today. So we tell lenders exactly when someone in their database, leads, prospects, past customers, or current customers, that we don't like to call them past customers, current customers, when they're ready for something else, we tell them about it, and we do it in a frictionless way, as fast as possible, and connecting it to the right people in the companies, right? The loan officer that was on file gets the notification about their borrower, their prospect, or their pre-qual. If it's some kind of orphan deal that nobody's attached to it, it goes to the team that will do the best job in delivering that message to that customer. So, we're directly tied to volume, ROI, profitability. So and of course, customer experience, but that's what we do.
Awesome. Appreciate that, Alex. Okay, so one of the things that I know that when we were planning the conference, the Mortgage Innovators Conference, one of the things that we wanted everyone to come away with some practical application, not just sort of get hyped up about the latest app or the latest gadget, but what can you practically do to improve your business? So what are the ways, from your perspective, what are some of the ways that lenders can use technology to retain customers? Like you said, I mean, that's the name of the game now, or should be the name of the game. So what are some of the practical ways that can do that?
Well, first of all, I love how you said it should be the name of the game right now. It's so interesting. Right now, in this very moment, so many of our clients are saying, my goodness, we're setting record highs, right? I mean, we're setting records above and beyond. And so our message to our clients right now, and all the new, and all the new lenders that we're onboarding, is, hey, let's not focus on volume for you, because you have that. That is raining on top of you. You can't even control it. You're tripping over deals. So let's not focus as much on volume and focus more on retention, right? So let's not focus on the leads and prospects and pre-quals and people that just didn't move forward for some reason for you. You don't have a real relationship with. You want to have a relationship with them, but let's focus on just retention. Your current customers that you would absolutely be devastated by if you found out a year from now during this hot time you could have done their loan, but they went to a competitor. That hurts. Like when you have that customer base and they're cheating on you, they're going somewhere else, and you're going like, hey, I could have been there for you, but I was looking out. I was looking in another direction. So our focus truly right now, especially out of all the times in our career, right now, retention is key. So what are the things that you could do right now? First of all, very, very simple. We talked about this at a separate conference, but I brought it up on stage also while we were at the CMBA there. Look, farming your database. The reason we call it farming and not mining, because you can have a mine that will go dry, but a farm is everlasting. It like nature, it continues to evolve and regenerate itself. So the very first thing you need to do when you have a farm is you need great seeds. So the very first thing you can do right now, everyone on the call, does not cost anything, is to make sure you're collecting accurate data from your borrowers. Make sure it's accurate, right? Make sure you got the right name, the right spelling, the right address, the right information. Make sure you're filling in email and phone number. Very simple. Do not let anyone get off the phone without getting that information. Don't even start asking about mortgage-related questions until you say, let me confirm your name, let me confirm your email, your phone number, your address, let me get all of that. Okay, now let's talk, right? And so the very first practical thing you can do is get the right information, right? Start collecting that, okay? The next thing you can do is start getting data, or start getting daily notifications on the relevant things for your customers, okay? For them, all right? And here's the best part. When you're starting to get relevant, timely information on your customers, you can get rid of spam, okay? This is one of the things that absolutely plagues this industry. 20, 30, 40, 50 touches. I don't even know what the new number is today, right? Well, how many times do you have to touch someone for them to become your client again? Well, apparently there's no good formula there, because only 17% of people come back, right? So the formula of just random touches doesn't work, okay? And if you ask yourself, again, this is something very simple. Ask yourself, do you like to receive random things that aren't relevant to you today? Right? If I'm going to a music festival today, I want to know the weather. That's relevant. Fantastic. But if you're telling me the weather where the music festival is going to be a month from now, I don't care. I don't care what the weather is right now, because I'm not going to be there right now. I'm going to be there a month from now. But you're telling me today's weather doesn't matter. So what am I getting at? When you're sending your borrowers information that's not relevant to them today, guess what? When you have something relevant to share, they're not listening. So stop it. The most practical way you can retain a customer is to show them that you're only going to reach out to them when it's relevant to them. I'll give you one story, and then we can get to another question. I was at a conference in Vegas. I had another tech vendor come to me and say, Alex, I love what you're doing. We love what Sales Boomerang stands for and what it does, and we love it. And I said, really, why? He says, well, what's interesting is I got a call from my loan officer, and he says, hey, his name is John. He said, hey, John, I send you a lot of mail, but sometimes it's important, so I do need you to open it. And then there's this pause, and I'm cracking up inside. Of course I'm not opening all your mail, because why are you sending me irrelevant things? Why don't we agree to this, Mr. and Mrs. Loan Officer? You only send me the important stuff, and I guarantee you 100% of the time I will open all of it. You just send me the important things, and I will open every piece of mail you send me. So that's just a micro example of what happens on a macro scale. We send people all kinds of things, and then we wonder why they don't respond to us when we really have something to share with them. So you want more retention? Be relevant. Be there for your customer, and only be there with things that they can benefit from. Nothing else. Don't call and ask questions. Don't call and be like, has something changed? Something new you'd like to do in your life? No, come there with data. Be informative. Be helpful. And give them options. And one of those options should always be do nothing. Mr. and Ms. Barr, you can do nothing. It's up to you, right? That's your option. That's how you retain business.
Wow, that's some great insight, Alex. Thank you. Thank you. Well, I think we're getting a little short on time here. We want to make sure that our audience has a chance for some questions. So, audience, if you can at this moment, or if you've got a question for one of our speakers, go ahead and use the questions module in the GoToWebinar portal there, and then we'll ask those here in a couple of minutes. John, I'm going to toss it back to you here and let you take over.
Sure. Yeah. Thank you for that. So we still have some time left, and I'd like to flip it back over to Laura. Laura, I think you had a question left for Adam. So why don't we jump into that? And by the way, great dialogue today, everybody. Thank you so much. Over to you, Laura.
Great. Thanks, John. Adam, just one more question. I mean, hearing especially today from Matt and Alex and yourself, it kind of just brought me back to the conference. And I know there was a lot of talk about this particular topic. So just to kind of wrap it all up, how do you think that tech innovators, how do we have to think about integration in data standards?
Yeah, so I think the one thing you're going to hear from every vendor out in the market that's out there that's trying to kind of push this technology is you kind of have to take a step back and say, what does my core service and offering provide from an ROI perspective, and how is that ROI mitigated or enhanced by how the lenders can access it, and what level of preparation of data is required to kind of consume your service. And so I think one thing that we're seeing now from a lot of our kind of brethren in the tech side and the vendor space is this approach of saying, how do we come up with some pretty basic fields and standardization to kind of approach that paradigm of what the lender system looks like, the lender landscape looks like, of the data fields, of the document types, and et cetera. And so one thing we do, and we've been big proponents of it, is to go and leverage MISMO. So, working with the MISMO data standards, version 3.4, and kind of getting that, kind of data standardization in place so that, yesterday when one of the lenders that was present at the conference was asking for our testing, back testing and testing to start as part of their implementation and approval for the onboarding. So thank you, CMBA, for a customer referral and client referral as a result of the conference. One of the key things that came up was our tech team needs to know specifically and precisely what data field X is. And we were able to kind of very quickly do that because we've invested the time and technology to kind of find those data standards. Not everyone's going to have that easy approach. But the idea is that when you're building your tech stacks out and you're building your APIs out, which is kind of really where a lot of these integrations are taking place, is to kind of have that commonplace understanding and metric that is available to you and your clients, as well as your integration partners like Tavant and FormFree that we'd mentioned, and also being able to go to the LOS providers like LEMA, where we have our integrations with the LOS providers as well, to make it as seamless as possible to understand what do we need and when do we need it.
And Adam, just to jump in, as this is Matt from Tavant, as a facilitator in that space, when we approach connecting the dots between two different data providers or data standards, we do exactly what you touched on. Going to leverage the heck out of MISMO standard 3.4. Yet at the same time, in our technology design under the cover, we know that not everyone's going to be 3.4. Some are going to be 2.x. Some are going to be something else. And so in our approach as a facilitator across data boundaries with FinConnect, not only do we leverage the common standard and make that even more common and more useful across business, but we do a lot of translation. So we'll take, what a given provider has that may or may not be close to standard, and we'll translate that and then present it in one way to the world that is according to the latest standard. So heavy lifting being done by the technology, so that we can have good connections across the work process.
Yeah, and I think the question also like it lends itself to, we're talking about innovation. So one of the things that we also were able to do, kind of echoing the comments from Tavant, is when you do have kind of that translation ability and that kind of, I don't want to call it the universal adapter, because obviously we all know that that's not the case in this industry, but to be able to tackle as many of those data challenges as possible, it becomes easier to explain the efficacy of our tool, and also becomes easier to adopt and create new data standards and new data fields, which is something we're working on with Mismo to kind of introduce these new fields that are focused on fraud and risk management, which is a new realm for folks like Mismo to kind of think about driving these best practices we're talking about. And so as much as innovation occurs, and it will continue to occur in terms of the consumer interaction, the point of what we do always will be and has to be improving the customer experience. And by us being able to kind of create better data, validated data, make sure the consumers are working with bona fide parties, intended parties, we're able to do that. And so the idea of data standards has also kind of become part of what we're moving towards. So not what we consume, but also creating a standard for what we deliver back to the market.
Great. Hey, Dustin, do you have a contact screen for everybody?
I do. There we go.
Okay, perfect. All right. Well, hey, look, you know what? If anybody in the audience has any questions for any of these people, here's all their contact information, and we do have just a couple of minutes left here. So, Dustin, I'd actually like to flip it back over to you and Alex.
All right. So, hey, Alex, one final question here for you. Are lenders that utilize ABI, are they experiencing ROI? I mean, as the ROI booster, it says, Boomerang, you got to be the right guy to ask this question.
Oh my goodness, I wish I could share my screen with you. So ABI, just so everyone is clear, is automated borrower intelligence, and ROI, absolutely. Our clients on average experience 11x. For every dollar they spend, they get $11 back. But we run the gamut. We have a client right now that's over 60x, where for every dollar they spend, they get over $60 back. But it's the least expensive way to find the right candidate inside your database, and the most profitable loan you can do, because it's most of the people that you've already worked with or know you. So it's, there's not a lot of proving yourself to them, but rather reminding them of why they gave you a chance in the first place. That's kind of what we pride ourselves on. Our first campaign when we launched in this industry was ROI meet your steroids, right? And it's proven to be a very predictive campaign, because that's exactly what has become a fact, is that every single client that comes to us, again, sees on average 11x ROI. So yeah, one of the most proud numbers that we're proud of. It's not even for ourselves. It's not a pat on our back. It's a pat on our lenders' back, that they take the data, they run with it. The loan officers truly understand the value, and then of course, I'll leave the answer with this. Besides the ROI for the loan officers and the realtors, the ROI for the realtor partners, where they can take a realtor database and find all of these future purchases and transactions for the realtor and themselves, and that is probably fueling all of the enormous results that they're getting. So.
All right, appreciate that, Alex. John, if I can impose on you 1 second before I let you close it out, just a reminder, if you enjoyed this conversation, if you enjoyed our first Mortgage Innovators Conference earlier this month, we've already putting plans in motion for next year's Mortgage Innovators Conference in 2020. It's going to be in May, so we're going to do it a little bit earlier, so not August. It'll be in May this year, same location in San Diego. And the information for sponsoring or registering will be available on the site here within, I would say, a couple of weeks. We're finalizing the documents now and the information now. So that'll be on the same website, mortgageinnovators.com, and look forward to seeing you all there next year. So, John, back to you.
Absolutely, great. Well, look, thank you all for joining us today. And please do me a favor. We would really appreciate your feedback. And so you'll be getting a survey probably within the hour or within the next 2 hours. If you could please fill that out, let us know what your thoughts were about today's conversation. That would be very helpful. Thank you all again, and enjoy the rest of your day.
Thanks, everyone.